Hello and welcome back to the Costing and Pricing Learning Program. Apologies for the slight delay in starting this webinar. We had a couple of problems, but they've been dealt with. Thank you for your patience and for sticking around. This is webinar 12 in our webinar series, Costing and Pricing for Volunteer Directors. As usual, before I get into the substance of the webinar, I just want to remind everybody regarding the copyright arrangements that are associated with the Costing and Pricing Learning Program. Remember, all of the materials are available for use commercially or otherwise to make sure that we, as far as possible, can help to increase the capacity for costing and pricing and financial sustainability within the disability services sector. But there are some restrictions about how you might use the materials, so please make yourself aware of those restrictions so that you don't inadvertently breach the copyright on these materials. The navigation is, again, normal at this stage of a webinar. Previous webinar was webinar 11, which is NDIS and frontline staff. It looked at the way frontline staff might be affected by the NDIS and how they might see the NDIS and also how they might respond to it. This webinar is looking at costing and pricing for volunteer directors, and the next webinar looks at costing some specific issues such as volunteer time and donated assets. The learning objectives. This webinar is very much intended for viewing by volunteer directors of disability service organisations. So those people who are responsible for governing disability service organisations and responsible for ensuring that they're strategically and financially sustainable into the future. As such, it's a fairly high-level introductory presentation and focused on governance rather than costing and pricing practice. So it is for those volunteer directors who might want to understand better how they can operate as a director within this environment. Of course, there is a context to the NDIS that is also critical. The first thing I would mention is that the NDIS is, as many would be aware, based on the idea of person-centred care and individualised funding. But it's not the only human services model that's based on that. In fact, most jurisdictions around Australia have adopted person-centred care and individualised funding models for a number of services, not just in the disability realm. However, there is significant pressure on government. Dramatic fiscal imbalance, which means that state governments particularly have not had the capacity to pay for disability services, and so the Commonwealth Government has now come in with the NDIS. There is, of course, costs associated with delivering disability services, and particularly challenging for directors and organisations is the fact that there's been a rise in standard of living costs affecting many not-for-profit organisations, and so that is a challenge that needs to be dealt with. Human resources challenges, as well as increases in raw demand, so numbers of people who have a disability and are seeking service, as well as the acuity of that disability, that is the increasing complexity of those disabilities, means that there is increased demand for services and increased complexity in terms of achieving or providing those services. The other problem that is increasingly being felt by disability service organisations, or potentially at least, is in relation to increases in expectations of people that are seeking disability services or their natural supports, their family and friends and so on. Finally, disability service organisations are incredibly complex organisations, and the financial aspect of those organisations is equally complex, and so directors need to be very much attuned to the complexities of the NDIS, how it will work, the complexities of the broader funding environment, and the costs and other challenges faced by disability service organisations. It's about a deeper knowledge of your organisation than you might have needed up to this point in time. There are also some comments I'd like to make that might be pertinent to directors in relation to some of the white noise that is accompanying the NDIS. And by white noise I mean there's a lot of rhetoric, a lot of discussion that doesn't necessarily either explain or discuss the reality of the NDIS and how it works. The first element I think is important to be aware of is that there's a certain structural ambiguity within the NDIS, and that ambiguity relates to talking about the market mechanism, that making a market for disability services, about competition, and also about the opportunity for choice for those people who are accessing disability services. There isn't truly a market in relation to disability services, and indeed there's not a capacity for organisations to compete other than in relation to quality of service delivery and to some degree around price. However, that price must go down, not up. The second element that's really important to consider is the fact that a lot of people talk about competition between service providers within this kind of environment, when in fact the major risk for organisations is their financial sustainability and ability to continually provide services, as opposed to competing with colleague organisations within the sector. Indeed, I would argue that there's a real need for organisations to consider very closely collaboration rather than competition. I guess the final point that's really important to think about in terms of this particular slide is the issue of cost versus funding, and the need to understand the comprehensive cost of service delivery as opposed to the amount you're being funded for in your organisation. So these issues all represent some fairly major challenges for disability service organisations, including reform fatigue, risk of rhetoric, that is believing the rhetoric and not looking at what's really happening in the environment, hyper-responsiveness, that is you move too far and too thoroughly without having the evidence of what goes on, what's likely to occur as a result of the NDIS outcome, and also looking at short-termism, that you're trying to make decisions in the short term without looking at the medium and longer term outcomes that are associated with individualised funding and person-centred care. So there are some key problems or alarm bells that directors might be interested in looking at. The first is, under the new environment, there is a need for accounting consistency and increased focus on financial control and financial sustainability. Understanding what each service costs you to deliver and understanding the difference between that cost and what you get paid is extremely important. Equally important, of course, is maintaining a balance between those funded services that you need to be financially sustainable and those other mission-centric services that are typically underfunded or unfunded and which cost the organisation to present. You need to, of course, maintain a focus on your mission as an organisation, but you have to have a very strong intellectual appreciation of what that mission costs and how you are going to strategise to ensure that you overcome the challenges of meeting that mission. The final element that I want to emphasise on this particular slide is the fact that board skills, of course, need to be raised, and not just in relation to perhaps the particular disciplines that board members bring to their meetings, but more importantly, a deeper and broader understanding of disability services themselves, your organisation, and perhaps more substantially also the NDIS and how that works in reality as opposed to how the rhetoric suggests it might work. So in terms of financial risk to the organisation, it is important, of course, to arrive at a comprehensive cost for each service that you undertake. And a comprehensive cost includes all of the costs associated with providing a particular service, including costs like depreciation, annual leave entitlements, and other what we call accounting estimates, some of which have not traditionally been used in the cost in determining the cost of disability services in the Australian funding environment. You need to be able to determine a margin, and that's not to say the margin will necessarily be achieved, but in order to ensure that you understand what that target is. And we'll talk about the target price gap in a minute, but it's incredibly important that you understand that this is the territory, if you like, over which you will strategise from a financial perspective. Balance sheet strength is important, including cash flow strength, and relevant range decision points are also important. Quantity of services, types of service, the service mix, and locations of service delivery are critical parts of that relevant range issue. The final point that I would say is that price is probably one of the words that has been used around the NDIS system for some time, and which people expect to be able to access and use as the idea of a normal price that you might pick up in a restaurant or in some other service that you might be having delivered or undertaken. Remembering, when we talk about price, we're actually talking about that price that has been allocated for a particular service by the National Disability Insurance Agency. It's not a price in the market sense, it is actually a rationed price. And I think that's very important that we understand that we shouldn't rely on market mechanisms to see the efficiencies that seem to be talked about in the context of the NDIS. Of course, the responsibilities of board members under this arrangement don't change at all. Seeking to achieve constitutional objectives is, of course, the most important aspect of what you do, and financial risk and governance risk are a very close second in relation to that. All of the normal requirements, responsibilities accrue to board members, but unfortunately under individualised funding type funding arrangements, you'll find that more risk is transferred over to the Disability Service Organisation from the government. As I mentioned before, an overall aim for every organisation should be to identify the target price gap, both for each individual service and also at the aggregate. The target price gap is simply the difference between your target price, that is the price required in order to ensure sustainability, so that is both a cost recovery plus your margin for your organisation. And margin's critical for not-for-profit organisations because it is the margin or the profit that actually builds the balance sheet, ensures you have sufficient cash for innovation and change management, and also ensures that you're able to pay your longer-term liabilities such as employee entitlements when they become due. The achieved price is, of course, the price that's actually provided by the funder. So in this case, we've used the example of the price offered by the NDIA for services rendered. The target price gap at the individual service level is very important, but perhaps from a director's perspective, the aggregate target price gap, so that is the gaps for all of your services in the context of the service mix, that is the numbers of each type of service that you provide, becomes most important for you because that actually highlights then the extent to which you have a financial gap that needs to be strategically closed. Further word on the NDIS, I think one of the things about the NDIS and individualised funding and person-centred care is that ultimately they are positive outcomes for people with disability, for support services and also for disability service organisations. Ultimately they will have very positive impacts. I think it's a short to medium term risk, but in the long term, costing of human services will deliver increased understanding, better communication within the organisation, better decision making, better risk analysis, and also better mission focus as you really look at those aspects of your organisation that provide unfunded or underfunded services and make determinations about the level with which you need to proceed with those things. The key stages of costing and pricing I don't want to go into in any great detail for an audience of directors. However, there are 8 basic steps to this, and those steps are important in the context of making sure that you understand both that the board should be involved in both decision making and policies around costing and pricing for your organisation, especially if it's not been done before, and also that you should be involved in receiving reports to the board, somewhat different to the traditional reports where obviously boards are used to seeing costs against actual costs, so budgeted costs against actual costs and budget outcomes, but you also need to have activity outcomes and understanding of the timing of those activities. Remembering under the NDIS, your organisation only earns revenue if it actually undertakes service delivery. So in that sense, the 4 essentials from a director's perspective for costing and pricing, and more broadly for NDIS type funding of services, is cost, price, activity and timing. You need to ensure you understand the cost, the gap between the cost and the price you're achieving, the level of activity required and the timing of that activity. In other words, you must undertake your targeted service delivery for the first day in the financial year and for each successive days. You cannot be behind in your activity levels because you won't be able to charge for those activities and therefore you may not recover your costs. There's always a cost-benefit consideration that directors need to take, however, in relation to reporting particularly, and I think that's something to think about. At the end of the day, costing and pricing and reporting can be undertaken to very, very small levels and to undertake a evaluation of the minutiae of the process. However, there needs to be a consideration as to whether there's benefit in undertaking that, because costing and pricing and reporting always costs the organisation. Remember, will the cost in time and money of reporting be outweighed by the value of the information developed? And really, only the board can consider that. I've already talked about the relevant range, but of course this is an area over which the board might strategise, particularly looking at what ideas are applicable within going from one relevant range to the next, whether there's an opportunity for increasing activity volumes or changing what you do to such a substance that you can actually decrease the overall cost of each service that you provide or the aggregate cost of those services at the corporate level. Remembering the relevant range is the range of activity and the time over which that activity is undertaken, in which your assumptions about fixed and variable costs and cost relationships are true. Beyond the relevant range, they change. So for instance, if you dramatically increase your output or your activity levels, it might be that you need to hire more senior managers, more payroll staff or other overheads that ensure that you then subsequently have an increased cost of service delivery. Putting it graphically, these are the key cost parameters and the fixed and variable costs associated with the relevant range. Come back to this slide and also look at the costing and pricing framework, the national framework, which is available on the Costing and Pricing Learning Program, together with the study guide that's available through the Costing and Pricing Learning Program website as well, to investigate these ideas a little bit more thoroughly. Pricing is important to consider, as I mentioned before. It's made up of the costs that you need to recover plus a markup for the that represents the needs that your organisation might have in the future. Remembering that making a profit is absolutely critical for any organisation in Australia's economy, and therefore that profit is used to build the balance sheet, which subsequently gives you the capacity to be financially sustainable into the future. Pricing considerations include remembering to make sure that you recover all of your costs and that you have some governance around your pricing to ensure, for instance, that pricing checks make sense, that you're not avoiding any tax or other issues that might be related to other regulators, and indeed that you're not achieving service unit shortfalls and therefore putting at risk your cost recovery particularly. Remembering here too that not every single service needs to arrive at a positive target price gap, but in the aggregate all of the services need to add up to at least cost recovery or better, otherwise you will have at best a medium to long-term financial sustainability issue for your organisation. Setting a margin then requires a few elements. Certainly, one of the things that you would do is that you would look at the financial needs of your organisation going forward. And one of the things that DSOs, disability service organisations, have traditionally been very good at is looking at their budgets from year to year. However, there is an increasing need under the new financial arrangements for you to consider developing a financial plan that might extend beyond 18 months, 2 years, to 3 to 5 years down the track. And particularly, that plan should include not only operational cash flow, but also capital cash flow, so the outflows for replacement of assets and so on. You need to consider those costs in the context of your premium, because those costs will need to be paid out of your cash flow at some future point in time. One of the important points to start with, though, when you think about margins and premiums, is to start looking at the actual margin that's been achieved historically. Have you historically made a profit, and what level of profit has been made historically? Remembering that history is always a good indication of the likely outcomes in the future. Control considerations for the board are, of course, absolutely essential. Ultimately, the board has responsibility, and therefore you should, as a result of NDIS, be exploring what kinds of reports need to come to the board and how frequently those reports need to come to the board, particularly in case of what margins are being achieved, what activity levels are being undertaken, and what discrepancies are being realised, and whether or not those discrepancies are going to cause financial hardship for the organisation in the future. And of course there are opportunities for you to think about this in the context of risk assessment, particularly in relation to activity levels. So working out the margin of safety, the contribution margin and the operating gearing of the organisation are things that need to be thought through for directors. The margin of safety, of course, is your expected sales minus your break-even sales. So that is the number of services you provide to cover all of your costs, as opposed to how many services you expect to provide. And that margin, the larger that margin between one and the other, the more confident you can feel about your financial operation. The contribution margin is another aspect that's really important, and that feeds into the relevant range decision that you would make. If you have a very, very small contribution for services, a general rule, a very general rule, is that the more services you provide, the better off you are. But you need to look at these ideas in the context of your organisation and its financial arrangements. So from a governance perspective, remember to have a proportionate response, look at the objects and the mission of the organisation, and develop strategy priorities. Think about the board reporting requirements and reevaluate the types of information, format, priorities, and also timing. Remember to look at activity as well as cost. You need to understand that this is about as much about how much activity your organisation undertakes and when it undertakes it, as opposed to how much it costs to undertake those activities. And finally, it's important for boards to engage more fully with their organisations, to have a deeper understanding of how the organisation operates, as well as a deeper understanding of broader disability services. So some practical steps would include the development of 3 to 5 year planning horizons, particularly financial planning for the organisation, developing messaging and continually updating in an honest way your staff, particularly those staff at the coalface, the people actually undertaking the work and who might not appreciate fully the financial or other strategic decisions being taken by the board and senior staff. That messaging is critical, but it's also critical to ensure that there is a positiveness to that message, that this is a difficult transition process, but ultimately it will lead to stronger financial capacity for organisations in the longer term. Remember to think on regulation. It's not just the NDIS, but ACNC and other forms of regulation are important here. And remembering, of course, controls and building your balance sheet. The final point there, making sure that you have an outcomes focus, is also critical to make sure that your mission does not get lost in the fight to retain financial sustainability. It's about intellectually grappling with that financial sustainability risk, as opposed to simply moving to a commercial model. There are a number of ways that you can provide information to boards and absorb information, and this is just simply an example that's been taken out of the case study that's provided in the study guide under the Costing and Pricing Learning Program. As you can see in this particular graph, each service is listed down the vertical axis with the percentage of target price achieved along the horizontal axis. And you can see in this particular example, only 2 of the services are achieving a positive target price gap. That concludes a very quick run through the decisions and complexity that is faced by directors in relation to the NDIS, and also broader individualised funding and person-centred care. Remember, the next webinar is Costing Volunteer Time and Donated Assets, and also remember that we at the Curtin Not-for-Profit Initiative are very keen to catch up with and talk to anyone who might have queries, comments, or any suggestions with regard to materials that might come up. Webinar 13 is yet to be programmed, and we will let everyone know when that's going to be broadcast. But remember also that all of the webinars are actually recorded and available on the Costing and Pricing Learning Program website. Thank you very much, and I look forward to talking to you next time.